Good evening, all. This is Shay Horowitz, ShogunTrading.com. This is our free weekly newsletter. Hope you had a great weekend. Hope you're able to relax. This is summertime. This is relaxation time for traders. Most traders take the summer off. Most hedge funds only work 3 days a week. Most people are away, and that's why volume is down. That's why volatility is down. But it's all about to change. This is almost the end of August, and we are starting to come back, and we're starting to see people coming back. Kids are going back to school, so vacations are over, and we're going to start to see volatility come back up and trends, which is exactly what the chart also tells us. This is S&P 500. This is something I've been talking about over the last few weeks, is this consolidation that the market has been going through and what that's going to lead to. Every time we get this kind of consolidation, it is followed by a trend. Right now, we are setting up for an uptrend so far. Why? Because we have higher lows and so far higher highs. Break that 1302, 1303 resistance level, and you can see the market going up. That's S&P 500. We show the Dow Jones Industrial Average, and you can see basically the same thing. Also, higher lows, higher lows, higher lows. We have some higher highs, and now a breakout would give you a very nice uptrend. This is something that you have to be ready for. The NDX, the NASDAQ, the tech stocks is already taken off. And basically the same thing I was just talking about, the type of consolidation, and it's already gone up. I do think that the NDX right now is going to pull back to about the 1900 level, and then I think it's going to take off again. I think it's going to wait for the rest of the market and then take off. So everything is really setting up for another trend. I hope you're ready for another trend. I hope you're positioned to find the right stocks and be in them. Now, one thing that's very, very important about bottoms of market or any kind of change or trend is that you have to look at sector rotation. Sector rotation is very, very important. One of the sectors that's the most successful for us right now, for example, and that's something I showed you last week, was the airlines. This is UAL, and we got into this one around the 942 level, and it's still working out pretty well for us up to the 1420. We also took AMR, and we also took the actual sector itself, which was the XAL. On the option side, we traded the options on this one, and whenever you see an index like that, you can take advantage of it by trading the options, and it does quite well for us. 2258 was our entry. The index itself went all the way up to 28. 6 points on a $22 index is quite a bit, especially if you work with options. The percentage return, it is quite significant. So anyway, this is all about sector rotation. I do think that the financials are looking a little bit better. I'm getting a lot of phone calls for the banks. This is Washington Mutual, for example, that got really beat up. Wachovia, that got really beat up. If you do want to trade the financials, I do not suggest individual banks. The reason why individual banks can go belly up, and they can go belly up overnight, and there's nothing you can do about it. There's no warning whatsoever. If that's the case, what you want to do is you want to trade an index. You do not want to trade an individual stock. The XLF Financial Spider, that's the one that you want to. That's the one you want to dabble in, because that will give you the safety and the diversification that an individual stock is not going to give you. I don't think they're quite ready, but I think they are setting up, and I think little by little you're going to see sector subsectors inside the financials. They're going to start coming up, and so on. I do think that the economy is going to recover. Economy always recovers. When everybody's complaining about the economy, that's usually the bottom. When everybody's doing bad, that's usually the bottom. When the last person that that's complaining, it's usually the bottom. It's the same thing as the real estate market. When the real estate market was at the highest, everybody was a real estate investor. When everybody says that everybody you talk to says they're a real estate investor, it's usually the top of the market. When everybody says, real estate will never go up, that's exactly the bottom of the market, and it will start coming back up. We are going into election season. There's a lot of hope out there. There's a lot of excitement out there. And I think now that people are going to come back from vacations, it's time to get to work, and it's time for the market to come back up. So make sure that you're positioned in the right sectors. Make sure that you are that you're positioned in the right stocks. One of the things that we're looking at right now, for example, is the oils. And remember when I called the top on the oil, if you look back at these newsletters, you'll see that we called the top on the oil, and it's really coming down. And whenever oil comes down, you can start seeing the oil services come down as well, because just they're based on the same commodity. And that's the reason why, of course, our airline sector went up, and we enjoyed that one tremendously. I think oil broke its uptrend. I think it is starting a downtrend, but I do think we're going to see another bounce back up to about this level, to about the 125, and then I think we're going to come back down. So be prepared for that. That does not mean that oil is coming back up and the economy is going to go down. I do think I do think that the oil and the rest of the commodities are still going to come down. They still have some downside to go. Anyway, that's all I have for you for this week. Get ready to come back to the market. Get ready to start investing again, because you do not want to miss the market when it starts rolling. Remember, we talked about this consolidation. It is time to get going. Have a great week, and I'll talk to you next weekend. Take care.